Alright guys, how's it going? I hope you guys enjoyed your weekends. Got quite a few slides to get through today, so I'm going to try to get through this quick because I'm pressed for time. I still haven't finished packing and I'm flying out Wednesday morning, so the wife's been on my case all day. Anywho's, we have the dollar index weekly time frame in front of us. And as you can see, we've been in quite a downtrend for quite some time now. From where we are, the levels that I'm looking at that's most salient to this current time frame is the fair value gap that we have still left above the market. So we have from this candle's low to this candle's high. We only have sell side delivery here. We obviously have the sell side liquidity resting below this swing low. So we have our 3-bar swing low. We're also failing to close below the close of this last down close candle. So this is our rejection block. And from this candle's high to this candle's low, we have this balanced price range. So we've had buy side and then sell side pass through that range. On the daily time frame, I'm interested in this volume imbalance. This volume imbalance sits around the consequent encroachment of that weekly balanced price range and that value gap that I just delineated on the last slide. We have sell side liquidity resting below this low, so we had our range high and our range low. We were consolidating inside of that. We just dipped below it a little bit. Trying to read order flow, we have been bearish. We found resistance with the volume imbalance up here, and then on this up close candle, saying that we have left these relative equal highs, and I'd prefer to see it gravitate back towards this volume imbalance up here. At the time of this recording, I don't think we're moving higher, but I don't think we've quite taken out these highs yet. So Monday doesn't look that there's much volatility based on the news. So Tuesday, Wednesday, we might see a spike up into there. If we get back above this volume imbalance, then potentially I want to see a run above this high and into the volume imbalance. When we get there, then we want to reassess what price is likely to do. If we get back above the volume imbalance, back above this balanced price range, then we may be seeing a run for these highs up here. At the minute, I'm still neutral. There's an argument that the dollar wants to run higher, and based on what I'm seeing in the bonds, it's likely. And I could be wrong, and I'm happy to be wrong if that's the case. But I just feel that the bonds look quite clean, like they do want to travel higher. And like I said, we've got a lot of buy-side liquidity above the market. This for me is really choppy. This is very low probability trading in here. When the dollar index is in a consolidation like this, you want to really look at the crosses. But at the minute, this isn't clean. You don't want to be trading and caught up in this. From this candle's high to this candle's low, I want to see if we can at least gravitate back above 50% of this range. And I'd be interested to see what happens if we get back above this volume imbalance. And if we can break above this high. Because we've ran sell side liquidity here, even though it was a shallow sweep. And if we break back above this, this will be a break in structure. Potentially find support around here, and then have a run back up to the volume imbalance. That's how I'm looking at the market currently. And with that sort of framework in mind, I'm looking at what the other assets are likely to do. So we have the 10-year bond. We've run the highs here and come into this rejection block, so this last up close candle. The close of that, if we extend that out in time, is our rejection block. We've already hit once here, then ran back above this high and deeper into this wick. We have this balanced price range that we've had buy side, sell side, and we've had a lot of resistance around here, failing to get back above it. The fact that we've traveled lower to clear sell side liquidity and then we've come back up to here, this may want to run higher. Of course, we have this little fair value gap down here that we may want to trade into before running higher, but that's a potential scenario, and that will put upward pressure on the dollar. Between the triad, so the 10-year, 30-year, and the 5-year, I said that I was looking at this high, and we obviously ran above it, so we had a little shift in structure over here. Keeping an eye on the other two averages, we failed to take this high, and we failed to go above this high. So there is a slight divergence going on here, which I am paying attention to. I'm more interested in this divergence here. This is a much longer term divergence, and I trust this more than I trust this smaller one. And as you can see, we've run the sell side here and here, but on the 30-year we failed to run that sell side. So this is more telling for me. Looking at where we currently are, I wouldn't be surprised if we do see a push up. In the previous lectures, I have mentioned that we might want to gravitate back towards 50%, and this just looks very clean for me. If we get up there, of course, there's a long way to go till we get there. I'm interested in this volume imbalance here. I want to see if we can find support and stay above that. If we do, then these highs up here and this little imbalance between this candle's high and this candle's low, which sits around that equilibrium mark, that would be my next target. I don't like how we've run back up into this balanced price range. If this was poised to go lower, I would have liked to see a stronger reaction from here to run lower. I don't think we would have needed to come back to test it. So again, that might be a telling sign that we could be running higher. Of course, based on what we're seeing in the dollar index at the minute, this is still low probability trading. We're in this consolidation market. So I'm looking to see if we can get a break in structure on the 10-year and the 5-year, and I want to see if we can get back above this balanced price range. If we do, that's going to give me a deeper insight into what the dollar is likely to do. So the euro dollar weekly time frame. I feel like we want to push up into this area. So we have this down close candle, and we have the low of that down close candle to the high of this candle. There's still a fair value gap left there. I'm also interested in this fair value gap. So from this candle's low to this candle's high, we have a few arrays that align up. So we've got the close of this up close candle. So this is our breaker, low, high, lower, low. We run back down into that area. So that close, if we extend it out in time, we have this old high, and we have the consequent encroachment of that fair value gap. So if we don't run into this area first, and we come back down lower, that might be setting us up for a run higher. Of course, we'll have to assess what happens if and when price gets down here. We also have this candle's low to this candle's high. We've got this balanced price range. Now, inside of that balanced price range, if you split that range in half, the premium end of that balanced price range sits inside of that fair value gap as well. And we also have that 107 big figure level that sits inside of here as well. So I'd be very interested to see what will happen if we get down here. There's plenty of levels here that should offer support. If we break below it, that again gives us insight. And of course, if we get back above this fair value gap, then this volume imbalance over here is the likely long-term draw. Again, I've mentioned this over the past few lectures as well. So it'll be interesting to see what happens. Of course, this week we've got quite a lot of high impact news, and it's also non-farm payroll week, so you want to be very careful again going into this week. On the daily time frame, so this is zoomed in, I'm looking at this volume imbalance as well. I want to see if we can get below that, and if we come back up into it, it could act as resistance to send us lower below this low and back into this area. We've got these 3 consecutive down close candles, so again, if we get back below that, this may come up and act as resistance to send us down here, which we have sell side liquidity above the weekly fair value gap and above the order block, which is these down close candles over here. So I'm looking at the opening price here, and that sits in close proximity to that 107 big figure level. So we'll keep an eye on that. Coming back below this low doesn't necessarily mean that we're going to have a breaking structure. If we went higher first and then came back down here, then I would be less bullish. If we leave this little gap and we've got these relative equal highs, and then we come down, then it's likely to still run higher. Again, we'll have to assess what the dollar index is likely to do, but that would coincide with the dollar index running to its fair value gap in its premium, and potentially into that daily volume imbalance that we highlighted, which sits inside of that weekly fair value gap. So higher prices on the dollar would suggest lower prices on the euro, and if we accumulate down here to send it higher, then again, on the dollar index, that volume imbalance inside the balanced price range, we may just be coming up to rebalance and then potentially run lower for its sell side liquidity. So there's quite a number of people who are trading crypto in our mentorship group. So I've had quite a lot of requests for Bitcoin and other altcoins and stuff. I'm not going to spend a massive amount of time on them, but I will offer my analysis, and I'll be brief, and I'm only going to keep it to the weekly time frame. As most of you already know, I don't actively trade crypto. I do hold some altcoins and stuff that have been accumulating around this level. So I'm going to run through this quickly. We've come into this last up close candle, so the mean threshold of this bearish order block. We have this candle's low, high, lower, low. So this is our breaker. So I'm extending this line out. And that also sits inside of this fair value gap. So it's around a consequent encroachment. Because we've had quite an explosive move higher for 1, 2, 3, 4 weeks, we may want to see a retracement coming in, considering we've come into this bullish order block. So this is from this candle's high to this candle's low. We're in quite a deep premium. I'm expecting some sort of retracement back into this level. I'd rather it not come back down into here, because we've had sell side delivery here and buy side delivery, and then broke market structure here. So it looks bullish still from where it is. We may want to see price run higher into that and clearing the buy side liquidity above these highs up here. If we get back below this fair value gap, then I'm going to be less bullish. This just could have been a run up to take out buy side liquidity, and then just continue lower. We've got this low resistance liquidity run with quite a lot of sell side liquidity down here, and we still have inefficiencies that need to be filled in below this sell side liquidity. I like to see how it's repriced higher in quick fashion, and I like how we've broken above this high. So if we can find support here, then we're still bullish in my opinion. I want to see what's going to happen if we get up to here. But like I said, this is not an asset class that I trade, so we'll see what transpires over the coming weeks. Matic. I've had quite a few requests on Matic, so I'll quickly go through this. From what I can see, we've rebalanced and ran sell side liquidity below here. Spent a little bit of time in here, then broke back above it, and then we have this sell side imbalance, buy side inefficiency. We've spent quite a lot of time in here accumulating, and then we broke above it, and we've left this fair value gap. So we have an old low fair value gap, order block, low, high, lower, low. So we've got these two up close candles have a breaker that sits inside of this fair value gap. So we may want to trade back down into there and then run higher above these equal highs. We've come up into this sell side imbalance once, twice, and then rejected. I wouldn't want to see price to retrace back up to here. So the fact that we've come this high and broke structure over here after running sell side liquidity and finding support at the discount end of this sell side imbalance, we may want to attack these highs next because this looks quite clean. If we do get above that, then we have this candle's low to this candle's high, so there's still a little bit of an imbalance left up here, which sits inside of these two up close candles. So from this high to this low, this is in a real premium. We may see a sell-off once we get up to here, but looking at the structure at the minute, it seems like it wants to gravitate higher, but it might want to go lower first before it runs higher. S&P 500, the weekly time frame. So we've come back up into this volume imbalance, and I've mentioned this quite a number of times now. We have rejected from that slightly. So from this wick, consequent encroachment of that wick is this black dotted line. We have ran up through that, so we had this as a drawdown liquidity, and we've managed to get back up into there, and we've nailed the rejection block. So the close of this up close candle, the highest up close candle, we extend that out, and we nail that there. On the daily time frame, I'm noticing this fair value gap. So we've got this candle's high to this candle's low. I want to see if we can dip back down into this and see if we can find any support up here to run it higher to the consequent encroachment of this wick and potentially this high and this high. I don't want to see it travel lower than the consequent encroachment of this wick. I feel that we don't need to, and if we do, then I'm less bullish, and this could potentially go to reach the lows under this low, rebalance, and potentially these lows down here. So at the minute, I'm still looking for higher prices, but if the dollar does move higher, then that might be reflected with the S&P running lower before it goes higher. So again, it fits with what I'm seeing, but at the minute, I'm going to be honest, it's not anything concrete. So I'm trying to build a framework around what I can see. The relative equal highs on the weekly time frame is, again, there's going to be a lot of liquidity resting above that. So if we get back above this volume imbalance, it will most likely come down, act as support, and then we can run for the highs. So just to recap over last week's price action, we had Monday's trading, and we ran into the consequent encroachment of this wick, found support there. On Tuesday, we had an inside day. After an inside day, you are followed with quite an expansion move, usually on the following day, which is what we've seen here on Wednesday. We ran down into the consequent encroachment of this fair value gap. So from this candle's high to this candle's low. Now, I've had a lot of questions about ICT's recent video, and he was discussing inverse levels, like how different arrays can be inversed once price trades back into them. So in previous lectures, I've been telling you that you should be grading your fair value gaps. And at the very minimum, we have our low, our high, and our consequent encroachment. Now, generally, we're looking to buy in a discount and sell in a premium, right? But when we're in a bullish market and we want to see prices reach higher, a previous PD array will become inversed, right? So this becomes discount and this becomes premium. So we're buying in discount, right? And this should be left open. This gives an indication that we have a market that really is in a hurry to move higher. Coming back down to fill this level makes this less bullish. It doesn't work just for fair value gaps. It works for basically all arrays. And I've got an example on the lower time frames, which I'll show you in a minute. But the idea is when you're in a bullish environment, the discount was a premium level that's flipped, right? The whole point of this is just to measure order flow, how bullish and how bearish we really are. We want to see inverse levels. Instead of us buying in the bottom 50%, we want to be buying in the top 50% if bullish. And that gives us insight, basically. So I think a lot of people are being confused with this one. The way I look at it is if I'm coming into a discount array, I find the equilibrium point of the discount level, and I want to see it react from the top 50% and leave the bottom 50% open. Anyway, moving on. Thursday's price action. We have this wick. So from the high to the open is our sensitive part of our order block. When we've run through this a few times and dug into the order block, when we came back above it, this wick's going to be sensitive. But again, notice how we've broken back above it, and in a bullish environment, we're buying in the top 50%, right? So again, this is your inverse level, where we're still buying in discount, but discount becomes premium and premium becomes discount, right? And then on Friday, again, from this candle's high to the close of this candle, we have an immediate rebalance to consequent encroachment, leaving this fair value gap. And then price runs higher and nails the premium end of this volume imbalance on the daily time frame. So we come off that and rejected it and closed back below the consequent encroachment of that weekly volume imbalance. So it's likely that price is going to roll over and probably fill in some of this. I'm not sure if we need to come down and fill this. It'd be better if we didn't and we left it open and just again traded into the premium end, which becomes a discount end. I'm looking at this wick, so this is sort of balanced for me, and then this wick also comes into that consequent encroachment. But if we do go and fill it, that's acceptable. But like I said, I don't want to see the consequent encroachment of this wick breached. So these are some of the arrays that I'm noting on the daily time frame, because I'm going to take you down into the hourly chart and I want to just have a glance over at what I'm showing you here. So we've got the old high, obviously that fair value gap, this red shaded box here, so that's the high to the open of this order block. We've got the low of that last up close candle, which also sits inside of consequent encroachment of this fair value gap. We've got this fair value gap high, and then we got the consequent encroachment of this fair value gap. Here we have the hourly time frame, and I've delineated from Monday through to Friday, and these are obviously all the daily levels I had on the previous slide. On Monday we open and we travel lower into the premium end of that fair value gap, running sell side liquidity below these lows, and then we explode higher and running past the opening price of the bullish order block. Look at the manner in which we ran through that opening price. Okay, this is indicating to the algorithm that now we have a change in state of delivery. So we had a sell program for the last few days prior to this, and then as we ran through that order block open and closed above it, this now indicates that we're going from sell side delivery to buy side delivery. But when we have a buy program in place, what do we want to see? Think market maker buy model. We want to see the market run lower in order for it to go higher, right? And as you can see, we have the market running lower, clearing sell side to run higher. But on Tuesday, this was our inside day. And as you can see how price moved here, we open and we ran lower, clearing sell side liquidity below this low and rebalancing this inefficiency, and then ran higher back above the opening price and clearing this inefficiency and into the mean threshold of this last up close candle, so our bearish order block, and then sell off consolidating towards the end of the day. On Wednesday, again, we open, we travel higher into this fair value gap, and we have this high, low, higher high, so into this breaker. We come up into that, and then we sell off. We have this displacement lower, breaking below this low. So again, that's an indication that price is in a hurry to run lower, and we run the sell side liquidity below this, because it's very clean below here, rebalance the buy side inefficiency here, and then nail that fair value gap, the consequent encroachment on that daily time frame. So from the fair value gap premium end to the consequent encroachment end, that's the upper 50% of that daily fair value gap, which is what we want to see in a bullish market. Ideally, we don't want to see this go much lower into the discount end, which flips to become a premium, right? And then we see price really explode higher. So it spent very little time down here, right? When I see this, and then I see this balanced price range after the stop on and into a higher time frame level, once we go above it and we broke structure, this is not likely to be traded back into, right? We have sell side delivery and we have buy side delivery. So I don't want to see price come back into here, and as you can see, we don't. On Thursday, again, we open, consolidate, and then run lower, clearing sell side liquidity, and into that order block, so the high to the open. And again, this becomes an inverse level. Since we've come up to it and traded into it, once we come back above it, we're looking for an inverse level. So we're looking for the upper 50% to hold. Remember, inverse levels become inverse levels once they've already been traded through. So this is how we can work with reclaimed PD arrays and fair value gaps and balanced price ranges. This again gives us an insight that the market is willing to run higher. As you can see, we really rally from that after nailing the consequent encroachment of that wick and then really running higher. Consolidate, and then on Friday really explode higher, filling in again this volume imbalance, the weekly volume imbalance, and into that weekly rejection block. So we've come off that and closed below this, the open of this candle. So we may have a change in state of delivery again. We'll see going into next week. I haven't actually checked the charts currently on this. I haven't had the time today, unfortunately. So For me, this looks clean down here. It's most likely to drop into here. And then we have that daily fair value gap, and then these two down close candles, so we've got our order block inside of it. So that's probably the next draw. I don't want to see this low be violated. If that happens, then we're likely to go into 50% of that wick that we've seen on Wednesday, and that will be sort of like the last line in the sand for me. Anything below that, then we're coming for the lows, and then to rebalance that the lower 50% of that daily fair value gap. So let me take you into Wednesday's trading. Remember when I said if we're in a buy program, we're looking for lower prices and then going higher. So this over here is a larger fractal of what you're going to see in Wednesday's price action, right? So this is Wednesday's price action, and we have 12 a.m. to 4 o'clock, right? Now, when I look at the daily range, I'm breaking them down into the sessions. Now, I encourage you all to do this because you're going to see something, right? You're going to see how each session macro, right, price moves in its own way, right? And that's a really good study for you guys going forward anyway. Having your charts like this, and especially seeing what we did overnight, is going to help train your eyes, right? So we have 12 a.m. opening price, and as you can see, we consolidated around that and then ran higher, and we had 1, 2, 3 drives higher clearing liquidity. And then just going to zoom into here, we broke lower, breaking structure here, right? And this displacement left the fair value gap. As you can see, price came back up into that, and it just touches the discount end of this red shaded area, which is that daily wick for the order block, right? We also have these 3 up close candles. So we have our order block, we have this high, low, higher high. So these 2 down close candles is our breaker. So quite a lot of nested PD arrays in here. We also have a balanced price range from this buy side, sell side. Notice that we didn't need to come up to close it. And then we sell off again, breaking below this low, this last up close candle, and we have a high, low, lower high. This last down close candle is our mitigation block. We come into that and then again sell off, and that is in close proximity to this blue dotted line, which is a 12 a.m. opening price. So power of 3, we open, have a Judas swing higher, and then run lower, making this our initial consolidation, right? So we have buy side liquidity resting above that. Then we have an area of distribution inside of that fair value gap, in the premium end of that fair value gap. Then we drop lower, have another area of distribution, and then we have 1, 2, 3 drives lower where we have our smart money reversal into that consequent encroachment of the fair value gap on the daily time frame. So if we zoom into this, you can see how we had sell side liquidity just resting over here. So we had an old low, and you can see how we dug into that 3 times, right? So this is your 3 drives pattern. It's a reversal pattern. Again, ICT teaches this, and he got it from the Street Smarts book by Larry Connors and Linda Raschke. So I've read the book. It's quite a good book, to be honest with you. I mean, most of it's kind of a waste of time, but this pattern and the turtle soup pattern, they're very strong patterns, so it's worth a read. But what it's basically doing is driving into this liquidity, so it's really taking all the stops that are there, and at the same time, as it's creating these new lows, people are thinking, right, we've turned, so more liquidity comes into the market until it hits its higher time frame PD array, right? And then we see this move off, and we have a high with a lower high to the left and a lower high to the right. Once we break through that, we have a breaking structure, right? At the same time, breaking above the open of these 2 down close candles, so we have a change in state of delivery again, creating this order block, right? We also leave a fair value gap from this candle's high to this candle's low, and then we have this low, high, lower low, and then this last up close candle is also our breaker. So again, a few nested arrays in this area, and as you can see, we accumulated here and then really pushed price higher, had another layer of accumulation inside of this area where we previously had an area of distribution. So in here, you're going to find your accumulation blocks. So this candle up here, right? And as you can see, that's back inside of that fair value gap. So where do we find levels of accumulation and consolidation? Usually higher time frame fair value gaps, right? So when they all are nested like this, it gives you a clearer picture that we've now broke structure. We've reaccumulated on an old area of distribution inside of a fair value gap, and now we have consolidation with buy stops above us here and the initial consolidation at the beginning of the day that was created in London. Equilibrium sits in close proximity to this consequent encroachment of this fair value gap, and as you can see how we ran through that, we left displacement, so we're really pushing through that, and then have another layer of accumulation running back down into the order block, rebalancing, and then running higher back above the initial consolidation and clearing out the buy stops above this high. If we take our fib and we project standard deviations from the opening price, so midnight opening price, to the high that was created in London, this is our Judas swing. Basically what's happening here is the algorithm is setting its pricing parameters, right? The Judas swing is allowing the algorithm to assess how high that Judas swing has gone, right? So it's once this happens, it sets the parameters for the rest of the day. If we run standard deviations of that Judas swing lower, we get 3963.25, and if we extend that out in time, I've got my cursor hovering above this, the lowest candle over here, and the low of that candle comes in at 3963.25, right? So it nails that perfectly. There is a whole lot of things to study in here, right? And if you've been up to date with the mentorship and my teachings on algorithmic structure, then this is a really nice little experiment where you can combine algorithmic structure with market maker models within these time windows. And it opens up a whole new world. Again, I'm planning on going into detail with it, but I'm probably going to leave that to chartership level because we have a whole lot of new students in here and it's just overkill. I'm trying to keep it as simple as possible. So yeah, with that said, again, this has been a fairly long lecture and I didn't want to keep it this long. I've got to still edit and I've got to still pack. So like I said, the next couple of weeks I'm going to be away. I'm again traveling in. I'm traveling through the Middle East, so I've got a few different locations I'm going to be staying, and I really don't know when it comes to stuff like this. I'm super unorganized. I just leave everything to the wife to sort out. So I am taking my recording equipment and stuff, but depending on where I am and how much I'm traveling, I'm probably not going to be very active in the chat. I will when I get an opportunity. If you want to leave me your questions, and I do get some time in the day, I will still find some time to answer them. I should still be, hopefully, fingers crossed, making some lectures whilst I'm away. In the event where I can't do, then I will drop some analysis or something in the mentorship channel. But don't expect them to be huge, long videos, especially when I've got the kids around me, because they won't let me do anything. So I hope you guys enjoy the rest of your week. Stay safe this week, especially with all the high volatility that's going to be coming out this week with all the high impact news drivers. And I hope you guys found this one insightful. And I will see you guys again in the next video.